you the news, and as usual, if in my elder moment here I forget something, you just chime in. All right. Overseas in Asia, data released overnight in Japan showed that the country's big companies are still aggressively looking for liquidity. Loans rose by 1.4% month over month and are up 5% over the last 3 months, which is a record. In short, what does this mean? It means the Japanese banks have responded to the crisis by unleashing a huge wave of credit to borrowers. This is what we've seen in other countries as well. Also, we're going to talk about the Dr. Copper here in a second, but mirroring the strength, I will point out that iron ore futures, also kind of a cyclical indicator like copper, traded at 11-month highs last night in Singapore, rather, up 8% on the week. In Europe, the CEO of Daimler, which is Mercedes' parent company, guided June global auto deliveries slightly above last year's level, which is kind of interesting. He also said, without giving actual numbers, but he did say they saw positive order trends in key truck markets. Don't forget that Brexit is still on the back burner. Boris Johnson came out today, told the German chancellor he is prepared to leave the EU without a trade deal. If no compromise can be reached over disputes, I guess the sticking points are fishing rights and also the influence of European courts on British legislation. So if they did have a hard Brexit, is there an analogy we can look for? It would be like how they deal with Australia. No comprehensive trade deal. They have to follow the default World Trade Organization, WTO rules, and there'll be specific agreements for specific goods.
Hey, Lee, is it too American of me to say enough with the Brexit already? Does anybody really care?
Yeah, I think you're right. I mean,
Oh, man.
it's been going on for years and years. Yeah, you're right. All right, let's talk about the virus.
We're not sure which one I'm right about. Is it insensitive and too American, or?
That's right. I think it's been going on too long, I think. Okay, both the 7-day and daily averages for new cases have hit new highs as of yesterday. The net growth of hospitalized patients is the highest since mid-April on both the daily and 7-day average. Deaths are now also at rising on a 7-day average. Only 12 states out of the 50 do not have rising cases. Yeah, and if you take a look at what deaths per day are doing, they are at a record for the following surge states: Arizona, Texas, South Carolina, and Utah. Also, Florida, as you know, is a hotspot. They're at 80% of their peak deaths right now, but that is rising. This is also putting pressure on the reopening trade. We talked about this in Trader Talk, Lou, but you look at where the S&P is, it's where it is about a month ago. Yet, if you take a look at the reopening stocks, you know, like the gambling stocks, the airline stocks, the cruise stocks, they have fallen 27% over the same month period. Also, bank stocks have often also taken a hit, no surprise, given downbeat projections for economic growth. The KBW NASDAQ Bank Index is down 18% over the last month. I think we'll stop our scheduled stand here. I don't even know what that is. All right. So just saying that underneath the surface, the reopening trade is getting a little bit of pressure. It's obviously tech, and you're going to give us some great stuff on sectors coming up. But it's tech and all of its subcomponents that are keeping us going here. Also talking about that, United Airlines just came out not too long ago this morning. 36,000 employees are going to get laid off. Now, they can't do it until October 1st because they took that $25 billion in federal aid protection. But they're going to try to do some of them with buyouts or early retirement packages, but after that, layoffs. Also, Apple Maps data shows a slowdown in requests for driving directions. That's a warning sign on the economy. The 4 states that are leaders in average daily new cases, as we follow the Johns Hopkins board there. Florida, Texas, California, and Arizona have all seen a pretty substantial decline in driving directions requests. So again, it's this recurrence is maybe getting a little bit more serious than people originally thought. Domestically, there was a lot of Fed speak since our last charting the markets. Richard Clarida, the vice chairman, said in a television interview that the fate of the economy is tied to what happens with the coronavirus. That seems a little obvious to me. And he also said that the Fed will do more if it thinks it will help its job and inflation goes. He also said that well, our balance sheet now is $7 trillion. And then he went on to say, but don't worry, there's no limit to how much we can purchase in terms of treasuries. So we still have the Fed put in here, apparently.
Yeah, as we look at a 10-year treasuries here in a little bit, that's the confusing part is there's a story on why yields should be going higher, and then there's another story on why they should be going lower. So in the meantime, we're just kind of range bound, and it should be fun to watch it break out one way or the other.
Yeah, we'll take a look at that chart. Good observation. Also, Richmond Fed President Thomas Barkin said he, though, believes the conditions are in place for a good economic rebound. He said the economy now has in place, quote, unprecedented levels of monetary and fiscal support. So he's a little bit more bullish than some of them. Speaking of some of them, his colleague, Loretta Mester, said the health situation is starting to cause issues for the economy. So more of the Fed people are a little bit more cautious than he was. She said that when it comes to economic activity, quote, over the past week or so, there's been some leveling off, and I think it's probably due to the increase in cases, not only in Ohio, remember she's a Cleveland Fed president, but across the country. Domestic economic news, we had 5.3% rise in mortgage applications week over week. So that's okay, although year-to-date mortgage apps are only up about 60 basis points, so we still haven't caught up totally.
And the home builders have been loving that after that huge sell-off that we saw from February to March. Those home builders are making a nice higher high, higher low.
Yep. All right, let us go do our commodity scan here. Let's start with gold. Put on the other demo account here. We've been bullish gold, and the breakout continues. I am watching the 10-day moving average here to manage risk. Potential measured move, basically 1680 to 1790, 110 points, puts you up to 1900.
Yeah, I think Goldman Sachs also said that gold will reach 2000 in the medium term.
Yeah, they could be right for once. Let's take a look at the ETF.
I'm hearing 5,000 gold in the next 5 years. And that's why gold is such a funny one. You just know, are you trading it? Or are you long-term investing in it? Different longer-term portfolios like that Schwab Intelligent portfolio with exchange-traded funds, they have a certain percent of the portfolio in commodities for some of the risk groups. And that's something that I see longer-term people do as well. They might own 1 to 5% in something like gold just as a hedge. And it's been working this year.
Yeah, on a trading perspective, we pointed out the breakout when it happened. I would trail a stop on the 10-day moving average. Pretty clear how to manage that trade. Maybe take a little off if it hits that measured move target of 174 on the GLD. Let's look at the doctor.
And it's been holding that 10-period moving average. And I think the 5-period exponential moving average, it hasn't crossed below that since June 24th.
Yeah, so it's awesome. Awesome. Let's take a look at that copper.
And we have a question here. Okay. Does copper often lead the market? That was an inside trick. But something I want to point out here on copper is notice that copper actually peaked before, copper peaked before the S&P 500. So it started going down first. And then copper also bottomed first, where the S&P 500 didn't bottom until March 23rd. Copper bottomed several days before that.
Yeah, so I just put the overlay of the S&P here on it to make your point there. Absolutely. You can see that, to Lou's point.
Yeah, it's hard to get back to January if we go
Yeah.
back a little bit further. There you go. You could see there that the S&P
See
did
how,
not peak until mid to late February.
but copper started
Copper already
going
peaked
down.
there in January.
Yeah, so it is kind of a leading indicator. Now, I want to go back to a 6-month chart, and I want to point out the RSI, which is at basically very high level. And what I wanted to do is give you some data on if that means that a pullback or a reversion to the mean here on copper is going to happen. And really, not really. If you look at times where the RSI on copper is above 75, which we are now, it wasn't a strong bearish factor on any time frame. As a matter of fact, it actually led to more bullish than random returns for copper over the next few weeks and months. Eventually, there was a pullback, but it's hard to predict when. And just looking at the data here, even 2 months later, copper was up 77% of the time. So I would think that this is a good sign.
Hey, do you mind if I talk about sentiment right now, or are you going to talk about that in a little bit?
Go ahead.
Yeah, so I've been talking to a lot of our associate financial consultants across the country here recently and helping them come up with ways to reach out to some of our trading clients and just have conversations. Hey, we haven't had conversations in a while. Check in, see how they're doing. And something that I'm hearing is, hey, Lou, I'm here. They're telling me that a lot of the people that they're reaching out to are saying that they prefer to be in cash right now, that they're more comfortable on the sidelines for those longer term assets. And this really goes in line with what Fidelity said. I think people over the age of 60 between February and May, they actually went to cash selling all of their equities, 25% of the clients over 60, which is pretty amazing. And if you take a look at the AAII data on the sentiment numbers that they publish every week, going through July 1st, the number of bulls is only at 22.2%. And the number of bears being at 45.9%. So we have a working market, right? We have working copper, we have working S&P, yet people are not bullish and people are bearish. And they've done this survey going all the way back to 1987 every week. And the number of people in the optimistic or the bullish side is tied for the 83rd lowest reading.
Wow.
So pretty impressive at that point. So what's my point? My point is saying, look, when you see the market working, when people are not overly optimistic, I'm hearing a lot of people on TV say this reminds them of 2000. The reality is it reminds us more like 1996, where we're starting to see things get inflated, but people are not overly optimistic by a long shot. In fact, they're still pessimistic.
That means there's probably a little bit more upside. That is awesome.
And the more you think it through, it just seems like it can't keep going up, and there's going to be all these problems we're hearing from the airlines, and whether there's a second wave or not. I think once the stimulus goes away, well, my friends that are golfing every day and ordering DoorDash every day, that they're not going to have money to do that anymore. Hey, perhaps, but when you see the market working, you got to own what's working.
Excellent point. All right. And we'll look at the sectors. It's really the tech. It's not the reopening stocks that are working right now. Okay, let's look at oil. I'm going to take off the overlay here. So range bound, but not giving much back. So kind of neutral, but certainly not bearish on oil. And if you were going to use technical analysis 101, it does look like we still are making, even though they're not hugely higher highs, we are making higher highs. Kind of making matching, I mean, higher lows, we're making kind of matching highs. So it is not a bearish chart. Obviously, people are looking for a further run. You'd have to break out above 42 and a quarter. That means you would take out the gap, and that could put you pretty close up to $50. That happened. But right now, it's still, you can see kind of it's a range right now, but it's not negative.
And there was that a build of 5.65 million barrels when they were expecting a draw of about 3.1.
And it didn't give anything back. It must be the products. I didn't check the EIA today, but it
Yeah,
must
it's
be
pretty
the
impressive.
products.
Hey, did you? I just read this. The OPEC, they cut production by 1.93 million barrels a day to 22.69 million a day last month, and that's the lowest since May of 1991.
Wow, crazy.
That was impressive.
Yeah. All right, let's look at our bond signal on the 10-year first. To your point, Lou, it's just hanging out there, right? 10-year yield. Range bound. At a low level, though, to your point about the home builders.
Yeah, it
But
cannot figure out which way it wants to go. We had that huge spike in yields as the S&P hit those highs in the beginning of June, but since then it's come off of it. And the thing that confuses me here is how can interest rates go up if the Fed will just keep buying treasuries? And not only are they buying treasuries, but they're buying corporate bonds as well. How soon before they start buying equities? I think other countries are already buying US equities. So there is a blueprint for it.
yeah. Let's look at our bond signal on the TLT. Well, if you're doing trend following, we had a sell and now we have a buy again, right there.
So that's own bonds believing that yields are going down.
Right. Now, again, they're so close to each other. We said we wanted to break out of this little range. We actually did. So really, it would be long from up here after we broke out here. We got the confirmatory signal here on the upside. So if you're following this verbatim, it would be long the TLT. You can see the other signals have not been bad. We look at these two moving averages, the 20 and 50 period exponential. So it is suggesting to be long the TLT, which kind of speaks to your feel about them buying treasuries.
Yeah, Schwab's view is the 10-year should stay between 50 basis points and 100 basis points. And we're comfortably right in between that right now. We do have a question. How do you view gold as an investment? What % of your portfolio should you allocate to gold for retirees? The common rule would be no more than 5 to 10% of your portfolio, but for a retiree, you might be closer to that 5 as a max.
All right. Let's look at the market. So let's just take off everything here. First, if we just look at this, we did have a breakout of this triangle. But we've, like I said, this is a month ago, right? We're basically unchanged over the last month.
Mm-hmm.
But we broke out here. Let's just put the, looks like the 50-day moving average now is certainly could be very good support on any pullback. See where the two.
Yeah, that's what I would use. The 20 doesn't seem to be working at all, just slicing right through it both directions. So the 50 is where a bull might look.
Yeah, so if you are underexposed and it does pull back there, it might not, but if it does, that's a place maybe you could add. The 200 is so flat. I've never seen it quite that flat. It's
Yeah, we're
amazing.
about to get that golden cross. That
Oh.
50 days simple or 50 period simple moving average is just about to cross that 200.
Yeah, which would generally be a bullish sign.
intermediate to a longer term bullish trend. And the idea would be that, hey, why are we looking at charts to begin with? Because we believe things trade in trends and things trend a lot longer than we think they can. So instead of trying to overthink it, just look to the chart, let it tell you what it's going to do.
Yes, indeed. I did want to address some things that I've been hearing also. I want to look at the spiders. Whoops. And I want to look at the volume. I've heard a lot of talk about the volume is just weak. Is it, does that mean anything? It has been weaker. Now, some of it is seasonal. But I will, some people say, well, we're going up a little bit recently, but the volume is not that great. Should we be worried? Not necessarily. If you look at times when we went from extremely high volume to very low volume over 100 days, which is, I think, exactly the setup we have here, it wasn't a consistently bearish sign for stocks in any time frame. Yes, it did happen in 2007 and 2000 bear markets, but it's also occurred many other times in bullish cases. So that is not necessarily a deal killer for an uptrend. The data kind of proves that. So just wanted to make that because a lot of people are saying the volume's too low. All right, let's take a look at the Qs.
Unbelievable, right?
Unbelievable, just unbelievable. Watch that 10-day moving average. Swing traders, if you're really a short-term trader, there's the 5-day. Let's take off the 10-day, look at the 5-day. Some people use that. You can see when things are really rocking.
Mm-hmm.
That is a pretty good way to do it when it's really
So remember,
rocking.
there's not one moving average that you're always going to use. What Lee's saying is, look, figure out which moving average the stock or indices following, and then trade against that as part of the plan.
That's right. We can look at the NASDAQ as a whole.
So yeah, what this is saying is that, hey, these bigger stocks that are well capitalized, they're continuing to do well. And in fact, even in this COVID-19 environment, it's really moving a lot of people to some of these businesses. And it's also a safe haven. So people are saying, hey, where do I want to hide? I want to hide where there's still growth and where there's going to be growth in this uncertain time. And if you contrast this to something like the Russell 2000, you're just seeing underperformance there on those smaller stocks, where the NASDAQ made all of those losses back up, not the Russell. We're still off of our highs, right? And not looking pretty.
Yes, speaking of the Russell, let's see. Yeah, I think 18% of Russell components are losing money. But that was not necessarily a bad sign longer term, because when it gets to that point, investors start saying, well, it can't get much worse. And this is what we saw in the bottom of 2002 or in 2009. We had a high number of Russell companies losing money, and that was kind of the bottom. So I just throw that out there. So the fundamentals, if you're worried, oh, there's not making a lot of money, well, it's not as bad as you would think. Anyway, I thought that was kind of interesting. And Lou, I'm going to pull up a chart that you showed me. We're going to talk about sectors, and Lou's going to give us some really interesting information.
Yeah, so we want to do a quick recap on Q2 performance. And I actually pulled this screen from pulled the results from the Schwab.com, or excuse me, from Street Smart Edge, which we'll show you in just a second. But this is the S&P 500. This is called a quilt chart. So each color represents a different sector, and you can see year over year how some of these sectors have moved. So quite often people have recency bias and they want to trade just what's been working. And in fact, technology has had a tremendous run here in the last decade. But this is just to show you that, look, it's actually only led 3 times over the previous 10-year period. And obviously it's leading in 2020, yet it's incomplete so far. So this is from a third-party website, no relationship to this website at all. We don't get anything out of showing you this, but I just love how they put this quilt chart together in a timely fashion. And then Lee, as you highlight your mouse over something like healthcare, the blue or the purple color there,
Yeah, hang on, let me get my, we'll just click there. Yeah.
there you go. So it just shows you, look, some years it's a dramatic underperformer, other years it's a dramatic overperformer, and back and forth. So Lee, I want to ask the audience, how many technology stocks, right? Technology's led us higher so far in 2020. How many technology stocks led within the S&P 500 in Q2? And because I can't see anyone's hand and nobody's in front of me here, only one out of the top 17 stocks in the S&P 500 was a technology name here in Q2. And that was PayPal coming in at number 5. So let's take a look at some charts of the top performing stocks within the S&P 500 in Q2. And quite often, some of these top performers are only top performers because they're really bouncing after a huge decline in Q1. So the number one gainer in Q2, Apache, which is APA. It's an energy company, oil and gas, and it was up 237% in Q2. And looking at the chart,
yep, it's
still making higher highs and higher lows.
But
So
yeah,
just,
certainly not at highs, but that's interesting. You're just looking at it went from 4 to 13. That's a couple 100%.
yeah, and I would argue that this uptrend that we established here from those March lows is still intact.
Yep.
We're continuing just to slowly but surely trickle up. So if you're going to trade against something like this, figure out where you're going to walk away, where you're going to admit you're wrong, whether you're using a moving average or a previous significant low or just a support line drawing a line at the higher lows. Number 2, it was a consumer discretionary stock. Not the one everyone thinks. Right?
Not
The
Amazon,
Pepsi
huh?
name. It was GPS, Gap, right? The Yeezy. Kanye West, Mr. Running for President, he's doing something here with Gap is what's hit the tape over the last couple of days. And Lee, you and I were talking just before the podcast that Kanye West says he's going to run for president. Obviously, he didn't think everything through, but I do love the comment that he said he's running for the birthday party. The birthday party. Too funny. But once again, even though dramatic downtrend to start the year, well, now we're starting to see higher highs and higher lows. So I would say that this is a bullish short-term chart as well.
Yeah, let's just see. Let's look at the 50-day and the. Yeah, see, that's what you do on a chart like this. Just try a few of them and see what might give you a little guidance. At least in the short term here, we bounced off the 20 today. So interesting.
And I just bring this up because a lot of times when you show someone a chart of things that are at 52-week highs, like your Twilio and what have you, people say, oh no, I can't buy that, it's too high. Well, something like this is easier for someone to trade because there's so much room between their 52-week high and the current price. And at least someone can look at a shorter medium term chart to see that it's starting to work.
Okay, give us more, Lou.
Number 3, it's a material company that we haven't talked about in years, since probably the last time it was a darling, like in 2006. The ticker is FCX, Freeport.
Freeport. Well, yeah, I get that one. Copper's been going nuts.
Yep. Number 3 best performer in the S&P 500 in Q2, up 102%.
Wow.
Right.
So Q2, we're just looking at the last 3 months. There we go.
Yeah, so this is what you want to see: higher highs, higher lows. Come up with some type of support point that you could trade against. I prefer to buy something like this on a pullback closer to that support point, so you don't have to risk as much. But not a bad name in here. PayPal is the next one. So finally, our first technology name, PYPL. And this company is just outperforming And we really sold off into those March lows, but now look at this, higher highs, higher lows, beautiful uptrend, right? They were spun off from eBay. eBay actually acquired them way back in the 2000s and really did nothing with them. I thought that they kind of wasted this asset for a number of years. But it looks like everybody's on the Venmo, and people are projecting that, okay, at some point in the future, they can actually monetize that.
Interesting.
And
What's
this one here,
next?
it's a cruise line, Lee. Are you going on a cruise ship anytime soon?
No, but a lot of people want to.
Yeah, there's tons of people I know that love cruise ships. And someone actually, senior broke out the math to me and showed me how it's less expensive to live on a cruise in an all-you-can-eat environment than in Northern California. Yeah, so that's RCL is the name. 6th best performing stock within the S&P 500 in Q2. Chart doesn't look that bad. The name definitely worries me, but that's why you need to take single stock risk into account anytime you buy a position. Don't own too many shares. Don't make it too much of your portfolio because it can dramatically gap overnight on news.
Yeah, this one's not as good as some of the other charts, though, that you showed us.
Yeah.
I mean, you do have a significant higher low. I could here, let's see, you could draw a trend line on this one. Again, you know, you got to be careful on this one because we talked about what's going on with the reopening. But to your point, it is still in an uptrend.
Yeah, eBay being the next one, EBAY, consumer discretionary name, internet and direct marketing retail. And now that's another nice looking uptrending chart. But I do
Yeah.
have a rule. Anytime I see the RSI above 70 in an uptrend, I'm not avoiding it. I just need to know that I'm going to have to place a walk away or a stop order that's very close to where the stock is. So as you can see that RSI above 70, you could also see that eBay has really extended from the orange line or that 20-day simple moving average. So that's telling me, okay, I can't use a traditional way of getting out. So I'm going to have to use a much tighter moving average. And that's where you might put in the 10-day exponential or 5-day exponential.
There's the 5-day. I think that's the one to manage your risk at this point, honestly.
5-day SMA. There you go.
Yeah. Another way that people do it is sometimes they just trail a stop under the low 2 or 3 days ago. That's another way people do it. But I think here, the 5-period SMA is, and you know, when they say tighten stops, and everybody says, well, it's getting a little overbought, tighten stops. What does that mean? Well, what it means is if you were using the 20-day moving average, or even the, you know, you're using the 10-day moving average and you think it's too far away, you don't want to give back that much, use a shorter moving average like the 5. That's one way to tighten the stop, but still take advantage if it keeps running. So when you hear that tighten the stop, that's what a lot of people mean by that.
Yeah, we have a question on Wayfair, the big W. Huge uptrend, great Q2, but it's not in the S&P 500.
All right. What else?
All right, let's take a look at MRO. Right, another energy name here. Not as pretty, but if you're looking for a walkaway, you're much closer to making a lower low.
Yeah, right in here somewhere.
The MRO was up 87.82% in Q2.
Yeah, it doesn't take 3 to 5. We'll do that. Going from $3 to $5.
Next one, ABMD, a biomed, up 84.25%. Healthcare name, healthcare equipment. And yeah, and interesting, in the healthcare sector, that's one of the sectors that's really just range bound right now. It's not going higher, it's not going lower, it's really just going in a sideways range. Yep. The biotechs you could see are working, but healthcare is for me just kind of a no touch at this point unless you want to trade the range. You could short it right up against those previous highs, and if it makes a new high, find out you're wrong, close that short. But I will also look to take profits down towards support somewhere around that 97, 98 level.
And I would say if you are monitoring the biotechs, it depends on how much you want to give back, but this is continuing to grind higher. We've told you about this one way back here when it broke out. Again, if you think that 20 is too far, where is 10? That looks to be pretty good. So maybe if you want to tighten your stop, maybe go to the 10-day there.
Yeah, for a trade, not a long-term investment, but for a trade, if I had to pick between healthcare and biotechs, choice is clear here. Biotechs are working, healthcares are range-bound. So I would rather own or many traders would rather own the biotechs.
Yeah, let's just take a look at the IBB too. Yeah, kind of the same. So, yep.
Now let's take a look at Viacom, Communication Services Broadcasting Company, VIAC, up 83.79%. And let's also look at the communication services sector, if you don't mind. Yeah, so
this could be looking to break out maybe. Let's take a look here. Yeah, so watch this one for a breakout. It has consolidated the big move that it made earlier in the quarter or last quarter. Now I think you got to trade it as a range, or if you want, what do you think?
yeah, I would trade it as a range right now. Close eye on that 52 level. If that gets taken out, some would argue that the uptrend or obviously that range has been broken.
Right.
All right, we have another cruise line, CCL, coming in next, up 80% for Q2. And once again, the warning on the airlines and the cruise lines, be careful for the overnight risk. The Boeing the Boeing CEO said that he believes a major airline is going to go bankrupt sometime this year. And some of these cruise lines might not be far behind. So you got to be careful on that. All right, Align Technology, ALGN. Anyone getting plastic braces recently?
That's a good chart. Let's see what's working for this. Well, back above let's see where the 50 is on that one. Looks like the 20 hasn't been that predictive, but it's about the best we have, it looks like. I think maybe you use horizontal support on this one, maybe.
Yeah, or just keep looking, right?
Yeah.
MPC, Marathon Petroleum, comes in next. Energy name, up 77% in Q2.
Don't like the fact that it is taking out its 50-day moving average, though.
Right, and it also took out those previous lows.
Yeah, so
yeah, if you kind of actually go out to a year-to-date view, you could see that it's starting to turn down a little bit more.
yeah, so today's action is worrisome if you are long. Also, the volume is picking up a little bit as it's breaking that 50-day.
Yep, and then HOLX. This is a chart I'd love for you to take a look at. HOLX, Hologic Healthcare. It's a healthcare equipment name. Looks like you've looked at this before. Yeah, you nailed it with those upper resistance, which is now support there at that 54.91.
Yep.
So you could either bought that initial breakout or you wait for it to form that triangle where it kind of just trickles right back down to the previous ceiling, which is now the floor. And you might use that as your walk away.
Yeah, somebody wants to look at the gold miners. Yeah, we can take a look at them. We have been talking about them. Yes, indeed, they are breaking out. So there you go. Put a stop right under the breakout level. Potential target. You just use the measured move, 33 to 38, roughly $5. From 38 is 43.
Yeah, and something I talk to people about as we meet for one-on-ones virtually at this point is if you're just going to trade something, shorter term trade in something, be careful trying to pick your favorite stock or company to trade. And the reason is you have to have a sound risk management strategy, walkaway strategy. And too often I found when I'm trading something that I love, that it's really hard to follow your walkaway strategy. If you love it, great. Put it in your long-term buy and hold side. Don't own too much of it. Quit looking at it. But if you're going to trade it, be careful trading those sexy names that you're in love with because it's going to be very difficult to walk away when the chart tells you party's over.
I've fallen in that pit myself.
Yeah, right. And if you're only going to own it for a couple of days, couple of weeks, who cares if it's the name that's all over TV?
Right.
I want to take a look at Dish Network, DISH. Up 76% in Q2. Cable and satellite company.
Well, there you go. Pulled back to support, potential double top, but it has not broken or triggered. You got the 50-day run under there. Just
So a confluence of indicators there, right?
Yeah.
You have more than one thing to look at and trade against.
Yep. So now let's talk about technique for entering. Some people will enter right at that low. You do get stopped out more often when you do that. You never know for sure when it's going to break. The other way to do it is wait for a bounce to start. You pay a little higher, but you decrease the odds that you're going to get stopped out. It's totally up to you. The earlier you get into the trade, the more you get stopped out. The more confirmation you want, the less you get stopped out, but you pay a little bit worse price. So,
And Lee, let's go ahead and show people how I ran this screen. So go ahead and open up Screener Plus within the Street Smart Edge tool, if you don't mind.
okay.
And we are going to select New Screen, whether you click on the plus sign to do it or Actions. And within here, we're going to select from the very top, we want the
S&P 500.
S&P 500. There we go.
Okay.
So it's in the S&P 500, yes. Now we're going to do price performance. And right in here, you have percent total return.
3 months, right?
There you go. So percent total return is specifically only looking at the last recent quarter.
And then what do you put in there?
So I just leave that blank.
Yeah. Okay. And then we just look at them, right?
Correct. So
And now you can sort by total return.
yeah, so actually on the criteria on the very bottom, I put in the same thing. So go back to criteria. And at the very bottom, you have to say display top 50 results sorted by total return.
And then it'll sort for you automatically, right? You don't have to.
Yeah, total return 3 month. Perfect.
Yeah.
Yep. So if you're trying to run something somewhere, what's great about this is it will freeze the results from that Q2. So no matter what these stocks do here in the couple days in July, this 3 month return is the second quarter return.
Yeah. And if you want to, you can always export the data if you want to a spreadsheet. If you want to do further. Great teaching moment. That was really fun. We're looking at all those charts. Hopefully we gave you some ideas about how to manage trades, what to look for, and hopefully you enjoyed it.
Always a pleasure. I'm coming back at the top of the hour talking about exchange traded funds. We'd love to have you join us. And Lee, always a pleasure working with you.
Take care.
I look forward to seeing you next week.
Alrighty. Take care, everybody.
Hello, and welcome to the Quick Start video for the options chain available on Schwab's Street Smart Edge platform. Let's load the options chain. It can be found in the all-in-one trade tool as well as Symbol Hub